Sterling, what do you believe are the biggest issues that global investors are going to be facing in 2015?
Andrew, I think the most important issue for all investors around the world is what the US is going to do with interest rates. Whether that's in June, August, September, no one really knows yet, but there is no doubt that that's going to have huge impact across the world.
And how do you see that playing out? I mean, we know it's coming. It's like Christmas. We know that Janet Yellen and the Fed will push up the Fed funds rate, but there must be a whole lot of sequential issues baked into that we should know about.
Sure, absolutely. I mean, the market is spending so much time trying to read when it's going to happen. It's also trying to work out whether it's going to move up by 0.25% or what's called 25 basis points, whether it's going to move up by 1%, similar to what Volcker did in the 1980s.
Yeah.
The point being is it's going to happen. Markets know that it's going to happen. It's priced in to a degree, but I think a lot of people are underestimating how much it's going to shift, not just in equity markets, but across other asset classes around the world. And we saw that late last year and earlier in 2014 when the QE program finished in America.
Yeah, but I mean, cutting to the chase, it's worth assuming that this is going to be happening. These rates are going to go up because economic growth is basically on an upward trajectory in the US.
Yes.
What are the positives you see out of that, and what are the negatives?
Yeah, that's a very good question, and that hits the nail right on the head. The US, and the difference between the US economy and our Australian economy is the US economy is mid-cycle at the moment, their actual business cycle. Forget the investment markets, the actual business cycle of the US economy is mid-cycle. So they still have room to grow and expand, and it's moving in the right direction. Australia is definitely at the end of a business cycle. Who really knows? We haven't had a recession for so long, it's a bit hard to see, the numbers are distorted. But America has upside, the economy is relatively healthy, real interest rates should be at a probably more natural rate by now because of what's happened after the last 7 years. They're still subdued, we all know that. But the world is going to shake when interest rates change.
Now, one of the biggest issues...
Sorry, US interest rates.
Oh, sure, US interest rates. One of the biggest trends we've seen, certainly here in Australia, is the chase for yield. And it's been put very strongly to me that as soon as US rates start to move up, particularly the commercial rather than the federal rates, that could move up quite sharply, that will significantly reduce the attractiveness of the yield trade. Not just here, of course,
no,
but
absolutely.
around the world.
And that's a very complex and important, very good question, and a very important conversation at the moment, simply because it's not just what's happening in America. Japan has got its own policies going on with Abenomics, with printing money through their QE or their QQE program.
Yeah.
Europe is doing something similar, and they're all out of step at the moment. So,
but just summarizing in a way, we've got the US industrial engine, if you like, that's still only halfway through. That's clearly going to be a tempting target for investment. What's going to happen to emerging markets? I take it they might be left behind.
Absolutely. I think you could argue they already have, and then geopolitics obviously is involved with Russia. Brazil is facing a pretty scary future.
So commodity prices, we've got to come to those. That clearly US is going to be an interesting place to invest. Commodity prices, US will require more commodities, but they're not actually a huge user of commodities, are they?
No, other than what we've already seen, or that's already baked into the supply chain. But there are opportunities in commodities. It's an asset class that does have opportunities, but it's not going to be the easy ones that we saw 5 years ago with a booming China that we saw once in a 200-year experience.
So could I tackle you on issues such as where are we going to see the iron ore price this year? That's a cruel one. I'm sorry, I shouldn't have done that.
I'm going to stay out of that game.
You're allowed to stay away from that one. But I mean, I'm assuming that what's going to happen is US industrial production will increase, but it will not make up for the slowing in the growth rate of Chinese industrial production.
No, but again, the Chinese have been very transparent what they're doing. They're moving to a consumption-led model. They do need commodities, and they need different type of commodities that Australia can supply. There are plenty of opportunities for Australia, but the old coke and coal and iron ore story has run its course, and we need to move with what's happening in China.
We're going to have to grow out of that.
Exactly.
So for the Australian investor, in sort of 500 words or less, where would you see 2015 playing out?
I spend 80% of my personal time with my clients looking at the US. The US is driving everything. Why would you not look at the US? It always has been the engine of economic growth around the world, and it's most definitely going to be the engine of growth in 2015. Japan has some interesting opportunities, and so does parts of Asia.
But it's the US, or if any doubt, the US. Thank you very much.
Thank you, Andrew.